All right, everyone, welcome back for another episode of Carnivore Trade. Today is Wednesday, January 26, 2022. So, huge reversal here off the FOMC. Markets sold off yesterday after the close on Microsoft earnings. Microsoft ended up recovering and turned green, gapped up today, and that helped out the markets. And, market was trading higher earlier this morning. Semiconductors were strong. Tesla was strong ahead of earnings. They report after the close, by the way, along with Abbott, Lam Research, and a few others. So that will move the semiconductor space. By the way, AT&T getting smoked here. Verizon getting hit in sympathy to that. They guided lower earlier this morning when they reported. But the big story, obviously, is the FOMC. So at first it seemed a little dovish. They said that they weren't going to make any rate decision right now. They said they're essentially on pace with ending QE, but they, essentially said, hey, we're not, necessarily going to raise rates right now, but it is on the table. And then Powell opened his mouth, and it was just really all over from there. He went up there, and I think the market really wanted him to give a definitive direction and just a clear direction. And he seemed really nervous and uncomfortable on stage, and it really just kind of spooked the market out. And if there's one thing the market hates, it's uncertainty. You can tell the market that the sky is falling, and that's okay as long as you can price that in. But you give the market uncertainty, and it's just really the worst thing you can do. Now, we do have, again, Tesla reporting after the close. That was holding up really well up until that last power bar there. Believe it or not, spiders are only down 0.5% here. So this is a pretty big move off the highs today. See that 200 moving average getting rejected on the daily. I still think there is a possibility that this market could rally here in the near term. But, this is a different market. This isn't the same market that, every single dip is just going to get you back to all-time highs. So, if it does rally here, we'd probably at this area, we'd expect some lower highs or something like that. There is a possibility you could still trade up to this breakdown area around 450. But I think that would probably be max upside in the near term. But we really have to see if this market can get its footing here first. Now, Spider's only down 0.3% here. Volatility really picking up in the last 10 minutes or so here. Lots of volume coming into the market right now. Triple Qs, let's talk about that. So triple Qs are almost flat here today. So Qs might close green. They're actually going green now. So it'll be very interesting if we had this major reversal here and triple Qs are able to close green. We got the semiconductors still up 1.3% today. So semiconductors are actually scratching out a gain right now, believe it or not. And the market is trying to bid a little bit into the close. It could be, I tweeted this out earlier. It'd be interesting if this whole sell-off here was just some stop loss hunting. And if that is the case, then I think there is a possibility we could trade back up, up into this breakdown range on the semis. You'd be looking at 285, 288, maybe 290. And again, like on the spiders, around the 250 area. For the triple Qs, you'd be looking at, somewhere up in the 370 area, maybe the 200 moving average. But, I don't think that, I know this is a pretty bearish reversal, but I'm not convinced that we just go down here and take out these lows. If you look at this candle, look at the volume on this candle from Monday. That type of thing doesn't just give way after 2 days or 3 days. There's typically some area of you have to go up, rally up, make a lower high, and then come down, and then hit it, test it, and then make another lower high, and then you can break. But when you have that type of a massive reversal like we had on Monday on volume, usually that marks some type of a short-term bottom, and it typically lasts more than, like we said, like a day or two here. But, market's trying to pop a little bit into the close. You did have this massive sell-off here, and, it is still below all four moving averages on an intraday basis, but it is trying to rally here, and we'll see what it does. And obviously, earnings are going to move the market. Especially Tesla, considering how much of a weighting it makes up. We also have a lot, Intel, Lam Research, Abbott's reporting after the close too. So those will move the semiconductors, which make up a large part of the market, especially tech. But anyways, let's look on some sectors here. So let's talk about the Russell. So Russell was pretty soft today. It was actually bouncing the least out of all of the indices. And again, the Russell was showing strength on Friday and on Monday. It was leading. And then sometime around yesterday, that started to change a little bit, and the Russell started to show weakness again. So the Russell, a bit of a laggard here, and it is, underperforming. It is down almost 1.75% here. Then you have the Dow here, which is down 0.5%. The spiders that is down 0.5% as well, and the triple Qs, which are flat. So Russell continuing to underperform here. Dow transports, pretty big reversal, down 1.5, still holding this candle here from Monday. And I think this is a pretty good level. Again, I don't think it's going to just take this level out here without some type of a major, push, or at least some type of a rally up and a lower high here. But Dow transports are weak relative to the rest of the market right now. Home builders still holding on to the lows here. So we looked at we've been watching XHB, excuse me, over the last couple of days here. It is holding this candle here, but big reversal. And mainly the reason for that is rates. So rates did pop pretty hard off of the FOMC. You can see the 10-year up over 3.5%. 30-year up 1.78% on the day. And with rates moving up, that is not good for home builders. It's not good for real estate. So looking at the VNQ here, VNQ down 1.5, also lagging the rest of the market. So again, continuing to keep an eye on rates here. And that's really been the story this year. And that's kind of what we've been talking about all year. And look at the TVT popping a little bit into the close here, almost pushing 2% here on the day. Let's take a look at financials. So XLF still a strong horse. Financials are still holding up really well. Again, we got to watch that yield curve. If that starts to flatten out, that can change. But for right now, XLF has reclaimed its 200 moving average, and it's holding up in the meantime. Broker dealers put in a really nice candle tail on Monday. Did get all the way up to that 200, came way off the highs though. But again, anything financials has been, at least outperforming the rest of the market, even if it has been under a little bit of pressure lately. Nice little move here on JP Morgan, up 0.75%. Bank of America up almost 1%, and Wells Fargo up 1%. So money center banks are actually outperforming a little bit. KRE, on the other hand, is down almost 0.5%. So regionals and the nationals here, the KBE, are a little bit laggards here in the financial sector, but some of the bigger banks are holding up okay. XLE also holding up all right as well. This is flat on the day. It did get up to 66, and actually through that, we talked about this monthly resistance here. So XLE is still a strong horse, and again, with the geopolitical tensions, it's really hard to be, to fight this trade here. So energy has just been really strong. Doesn't mean it can't have a pullback day or two. The XLP coming in a little bit here, and the OIH still green as well, but actually up 0.5%. So, energy is just a tough trade right now. It's just holding up really well with all the geopolitical news. You take a look at crude here, actually making new 52-week highs, up 1.3% here as market is about to close in about 30 seconds. Take a look at nat gas. So nat gas getting a pop today as well, still inside of this red bar, though, at least for the meantime, but a nice little surge there on nat gas for today, up 4%. So let's take a look back into the market here. So Spider's about to close, and there's the closing bell right there. Let's take a look back and see where the Spider's closed, and we'll get back into everything else. So down 0.33%, so nothing huge. Just see if the triple Q's just under the flat line here, so down 160 basis points, nothing too huge. Dow down 44. And let's see what the Russell closed at. So down 1.5. So, market did try to get back to the flat line. It got close. But again, a pretty big reversal here, and it did finish off the lows. We'll see what happens tomorrow. I think the follow through to today is going to really tell the story moving forward. Let's talk about the dollar index. So dollar continuing to pop here. And again, we said that this dip a week or two ago was going to be probably a buying opportunity, and that has held up so far. Nice little hit off the 20, closing above the 200, and then follow through here. Again, we expect the dollar to move higher over the coming weeks and really into the first quarter of the year. Now, gold took a huge hit today. So gold getting hit, we talked about this, said after OPEX is over with, we got to be careful with gold, because how many times have they, they've already done it twice. They ran it up into OPEX and they smashed it back down. And with rates moving up, obviously that is not going to be good for gold. Major reversal here on gold. So if it loses this green bar low, you're probably headed back down to that 1780 handle. And then this trend line really becomes into play. And if that goes, then it's not going to look good for gold here moving forward. Silver also reversing off of that 200 moving average. If it loses this red bar low, you're probably going back down to 2250 in the near term. Platinum also coming off the highs here, although holding up okay. The real winner in the precious metal space has been palladium. This is trading higher off of the Russia tensions and Ukraine and so on and so forth. And that's really just the story of it right now. But coming off of the 200 moving average, this is also where you broke down from, so no surprise it's getting a little bit of a pullback off of that. But palladium holding up really well in the near term. And copper also flattish on the day. Again, nothing really to see here. Again, 451 and 434. That continues to be your short-term levels there. Let's look at Bitcoin. So Bitcoin actually coming off the highs, just like everything else. Did have a pop earlier on. Got a nice tail candle from Monday. Got popped all the way up to just under 40,000, so 39 or 38,928, so just under 39,000 actually. I still think you could trade up to 40,000 or so in the near term, but that is probably going to be a resistance. I thought Bitcoin would have gotten a higher bid or a bigger pop than this recently or over the last couple of days, but it has been a pretty muted bid off of the lows, and obviously the FOMC reversal here today having something to do with that. But Bitcoin has been a little muted. I still think it can get up to 40,000 in the near term, and if it gets through that, and the market does catch a bid, and we get up to maybe that 450 area on the spiders, then we could probably trade up to that 44, 45,000 area on Bitcoin. But until that happens, we'll just kind of, this market's really got to find its footing first. And this is a big rollover, but you're so close to support, and this is major support. Again, it's not just going to cave immediately outside of any sort of, if we get further escalation out of Russia, then that could possibly, really push the market through the lows. But outside of that, I'd just be hard pressed to find the market crashing down right now. That doesn't mean it can't trade lower. Doesn't mean we can't put in a lower bottom or a double bottom and maybe a lower high. But right now, we're kind of neutral. Like, we're in cash right now. We just closed out the rest of our longs right before the real drop. I mean, we had we got a little pop here initially on the FOMC. We started to reverse lower. We closed out our longs. We're basically in cash right now. So continuing our hot streak, we are still perfect for the year. So 16 out of 16 right now, and really rocking and rolling. But this is not a market you want to be a cowboy in right now. Cowboys are going to get shot this year. So be very careful trading this market. Only take the best setups, and moving forward, we got to watch. Let the market find its footing first, and then we'll get a clear direction, and we'll figure out what to do from there. Let's take a look at Tesla. So Tesla still doesn't look like their earnings are out yet. Let's take a look at Intel. So Intel trading a little bit lower. I'm not sure if their earnings are out. Look at Lam Research. So Lam Research, they've got a wide bid. And see Abbott. Yeah, it doesn't look like earnings are out just yet. But anyways, we'll take a look at it later on. But you guys take care. Have a great rest of your night, and I will talk to you all tomorrow.